Welcome to the Twomey Stock Market Report. Today is Monday, September 12th, 2022, and I'm James Twomey. All right, I want to get into a few things today. One is we're going to go over our weekly report and we'll get that posted into the video. In addition to that, we're going to do a little bit of education on a report that I did a few weeks ago and to catch everybody up on the logic and theory on that. We're going to go over some other quick items. So let's dive right into the Twomey Stock Market Report. What do? We follow the Twomey investment processes or tips. What is that? We look at the trend. We interpret the trends from the last 6 months to year to date and take a nice picture in our mind of where the overall trend is going. Now, it doesn't take a rocket scientist to look at a graph and say up or down, right? Or sideways, right? But what we're trying to do is take a big picture, get familiar with it, and then if you'd like, look at something more detailed than a daily chart of whether it's the S&P or the diamonds or something that's a standard chart that you can look at or mirror the market. You can also look at the weekly view or look at the last couple of years. But what we're trying to do is give you a feel of what the market's been doing, and as there have been some short-term trades change. And then what we also look at is we review the macroeconomics. What's that? These are more the fundamentals of the marketplace, the performance of economies, changes in economic output, inflation, interest, exchange rates, and foreign influence on those exchange rates, the balance of payments. These are a little bit more, the economics at a bigger picture. And then it moves into what I call the environmental influences. And these are, we look at the environmental fiscal policy, the government spending, taxation, global concerns, along with money flowing, or the sector that's hot or not hot, or what's changed over the past several weeks. And then we look at a little bit more lower detailed, and these are more technical, the advanced decline. And that I use as a big picture of the market. Is it advancing or declining? And there's something to interpret there. We'll go over that in future training sessions. Then all RSI, which is Relative Strength Index, which I want to touch upon here today because it was very relevant. And I hear more about that in the news, which I really hadn't heard that of late, to determine what short-term trades and trends. Because what happens is we come up with our analysis, both on fundamentals, and then we take trades or positions, and with that we start saying, hey, what's next in the market? What should we do? And then it's almost as if we're forming a bias, right? And then all of a sudden the market may change or your stock may change. It's either starts taking off or going down or sideways. And now your bias is saying, wait a minute, that can't happen. I believe the market fundamentally is saying X and Y, and my stock's moving against that. I'm going to stick with it. Well, that's not really good because you can lose money or you can miss out on gains. So we use technical guidelines, the technical analysis of the market with some analytics, and we try to put that into the equation and keep as guide rails so we don't go off on our bias and find out that the bias turns out that our analysis was wrong, which happens all the time, right? I mean, that's the stock market. So, oh, by the way, new buy alerts are posted real time. You need to sign up for those. You really need to. You want to go to the Twomey Stock Market website. That's the number 2 mestocks.com. And on there, you've got right on the homepage, you've got view our trade table. We'll look at what the current trades are, and then as up to date as it can be because I post it once a week. And then also the past 30 days or so is in there as well. We also give you the free newsletter. That's a very detailed newsletter. I'll show you one more time here. I know I've shown this before. We get into the weekly analysis, the trends. We go into, I don't want to do a lot of scrolling here, but we give you a lot of information about the trend. We give you our technical analysis of the trend. And then we get into what's going on from macro and economics and what are the industry telling us. We also try to get a little bit more how it's impacting our trades and why. And we talk about that in detail. Then we also talk a lot about what the experts are saying. These are the things that come out during the week. These are often, you have to you have to take these with a grain of salt. So I try to filter out the noisemakers. What I call a noisemaker, there's a lot of hedge funds and fund managers that come on and they're touting one thing, either for you to buy or sell. And then, often out the back door, they're touting people to come by and they're kind of relieving their position, right? It doesn't happen all the time, but it's a well-known trick, right? But I try to look at what the economic people are saying, some of the well-known institutions are saying, some banks, etc., and get the feel. I know you're not watching the market every day. It's really hard to filter out noise from real facts, so I try to give you some highlights of that. And it's funny because we know we've been in a bear market, right? All year long. We know we had a summer bear market rally. September was meant to be really volatile, and right now the market's doing pretty well the first week, right? All the news, all the economics, all the fundamentals are pointing to really bad activity in the market. It shouldn't be going up, maybe sideways or going down a little bit, and yet we're starting September with a pretty good bang. So it's really interesting, and it's all gonna change one way or the other, and we're gonna be ready to trade that. So we go over all that, and then we get into our environmental analysis, what I talked about, and then we talk about advances, decline, relative strength, and then the sector table where the money's flowing. Then we get down to our current trades. It gives it the buy date, the stock, the entry price, the current price. Did we sell part of our position or all of it? Where are we at the position right now? And then we look at the relative strength, thickness, and a few other things. So these are pretty good things that you want to keep looking at. So I'm going to close this out for now, and we'll go back to our story here. So that's it on the www.twomeystocks.com. Go to the website, get familiar with it, get some of this information, but you got to sign up for these real-time alerts. If you don't, you're going to miss out on the trades and what's coming in. All right, I want to talk a little bit today about relative strength index. We're going to go into some real data here. Let me see if I can pull that up. Yeah, I can. Okay, I do have it. All right, so what is relative strength index? It's an algorithm that tells you about where the advance of the stock or the ETF or the indices, SPY, Dow. A little bit of a mathematical formula goes into it. The net of it, we'll keep it simple, is the ratio, if it's 0 to 100, if you will. Anything that's in 70 is what we technically call overbought. What does that mean? All the buyers have exhausted themselves, in theory, and that there's less buyers out there, and the stock is going to have less buyers. It's going to have less to prop up the price, right? And then oftentimes you start seeing buyers either start taking profit or no buyers come in, and there's more sellers, and the stock tends to come down. It's not the end all and be all. It's just a indicator, and a technical one as well. Sometimes it's pretty accurate, sometimes it's not. Of late, it's been right on. It's been spot on, and I noticed a lot of people starting to talk about it, and the experts and the pundits and the newsletters that are out there, and all of a sudden it's like this miracle. It's not a miracle. It's been around forever. Take it with a grain of salt. If the market's been in the last rally that we've had for the longest of years, we were in a very bull market, right? The RSI can remain elevated for stocks like Tesla and Apple. Why? Because people are continually running the stock up, and it's not necessary. Yeah, it could get overbought and it could fluctuate, but the market is positive, right? So that number, you're like, oh, it's up in the high 60s. Maybe pull back. Yeah, it might pull back, but you don't want to get out of it because the market's in a bull run, and you're willing to take some fluctuation because you get a lot of profit probably in there. The converse of that is when it gets down into the 40 to 30 range, and 30 is technically oversold. What do we mean by oversold? That means a stock's been beaten down and there's less buyers getting rid of the stock, or there's no, and then if the market changes, there's a chance that people are going to come in and look at that and say, that's a beaten down stock. It's got a low price to earnings ratio, which we talked about in last week's newsletter, and the importance of that and how analysts use that fundamentally. So now what happens is people might buy it up. So we're going to go over a couple of these, but let's just take a real snapshot. I use this. I put this in the newsletter every week. It's the SPY, the Dow, the NASDAQ, the Russell 2000. I've got the long and short there because we've got some short plays and not doing so great now. We did get stopped out the first and second thirds of those, but this is a good snapshot. Let's just take the top one, SPY, which is the S&P, right? That's our proxy for the S&P. The index for the SPY 2 weeks ago was running up around 62, almost, well, 61 and a half. And, in there we were saying, we're on alert because all our long positions are showing exhaustion. They're getting near the overbought. And sure enough, what happens is the following week, it drops all the way down to 44. We had that 1,000-point drop. We went short and, things changed. And now this week, it's down as low as 35 and a half, getting near, we're in from overbought and now we're, nearing oversold. If you look at the short version of that, we've got the converse happening in that, right? It was, in 819, it was down at 37. It was over, really in the oversold territory. And we're thinking, oh, it's going to pop up. And sure enough, it did. And then we had a nice run up. And the market, the shorting the market is the inverse of the SPY. If the SPY goes up, the inverse or the shorting of the SPY goes down. If the SPY goes down and the shorting of the SPY, the inverse will go up, right? So it's a way to make money while the market's coming down. Now look at, we were down at low 30, in the low 30s or mid 30s, and I was saying, hey, screaming at the market's oversold on the short side, so maybe we're going to see some buyers come in and flip the tables. And sure enough, they do it. And within 1 week, it went up to 55. Now it's at 65. So, and our shorts are under pressure, right? Saying that they're overbought and they've been pulling back. Sure enough. So, what's the net of this? The net of this is this. And I put it in our stock tracker table next to the stock price on the right side, the RSI. You want to keep it in the back of your mind. If I'm looking at the stock and if the stock is starting to move a little bit, you can use the RSI as something to look at as a gauge. Is it near exhaustion, overbought, oversold? And let's pull up the SPY, right? This is the long daily chart. It looks like it's the, indice for the S&P. Now, a couple of weeks ago, we were the big picture trend. All right, this is a messy chart, I understand, but the red lines here, that from the year to date, 2022, trend's been down. So we've been in a bear market pretty much. The summer came, the end of early to mid June, bottomed out, hit the bottom of the Twomey trend track line here, and it reversed up. And then usually we say it stays within this track line, willing to take a little bit of pain there if the market goes up, because we know it's still in the downtrend and we're going to eventually return to the downtrend. Because every time here it hit up to this upper track line, it reversed. In this case, it didn't even get up there. Well, it crossed above the Twomey trend upper track line, and then it started to advance, and we had this blue track line start to develop, saying, hey, boy, we got to pay attention. And sure enough, that we did get a buy signal back here mid-July, end of July. I didn't pull the trigger right away. My bias stuck in there. It was summertime. I was like, it could be a false signal. And we should have jumped in. We had to wait about 5 days until we got a lull, and we did jump in long. Well, we'll make a long story short. RSI got up around here. It was at, this is the daily chart now. We had a 72.9. We had a 73.5. The market was really oversold. It was talking about it in my weekly report. We could be under pressure, and sure enough, what did we do? It raced all the way down. And then it got to a low on September 6th. The RSI went all the way down to 35. And we're saying, geez, at that point, is it oversold and it's going to return? And sure enough, it did. It's bouncing back up. Is it above all and end all? I don't know. But for some reason, in this market, it's starting to resonate as a major flashing signal. Not always, but in this market with the volatility that it has. I'm going to go on the short side, which is the SH, and we are holding a position. And you can see when we got in, we had our buy signal. It, we went through the Twomey down track line, got in. It starts popping up. We went all the way up into a 56.7 RSI, and it's been coming down ever since. We got stopped the first third, the second third. We haven't got our sell signal, but it's getting near a sell signal. Tomorrow, the CPI is coming out. Inflation month over month, most likely it's going to reduce because gas prices have come down. That's a big component of it, and a few other things. The supply chain is really alleviating. I read yesterday that there was only 8 ships off the coast of California waiting to get unpacked, if you will, or to get into dock on port. We were in the hundreds months ago, right? So I think the supply chain is telling us it's alleviating and we're going to get more product to sell out there. More product, more supply. If the demand stays the same and you have more supply, people may compete for that demand side of the equation, right? Because, I might, if I have a lot of product in inventory, I may want to sell some of it. The wholesaler may say, hey, I'll take less price because I want to move it before all these other guys. Supply and demand, economics 101. I think every politician should be forced to take economics 101, a crash course before they can enter the U.S. Congress. Because our worldwide politicians are forgetting economy 101. And it's not complex, right? Anyways. Enough said for the editorial. But anyways, we're on the watch. We get our sell signal, we'll pass it on. You got to sign up on Twomey, the number 2, mestocks.com to get these real-time alerts. They're coming out. I sent out 2 today, actually 3. So, you're going to miss them if you're not signed up. Let's see. So that gives us relative strength. I want to go to, we're short the 20-year Treasury bond with a TBT or TBF ETF. I'm using TBT in this equation. TBT, I've said it before. What is that? It's 2 times. So if it goes up $1, it's $2. If it goes down $1, it goes down $2. The 1-to-1, it would be TBF, where if it goes up $1, you get $1. If it goes down, it goes $1. TBTs is just an accelerated. The reason why I do that is because bond ETF don't move. They shouldn't move that quickly, but we're in a volatile market. Rates are going up. In theory, if rates go up, yields on bonds have to go up. The government has to say, hey, if you want to buy my treasury, people are saying, well, wait a minute, inflation is like 9%, right? I don't want 2%. I'm going to need at least 3% to give you money. The unfortunate or fortunate aspect of that equation is that the U.S. money is flooding into the U.S. from foreign countries because of what's going on out there. It's driving up the value of the dollar. It's making the U.S. economy look better. And people are saying, I feel safer. So they're buying U.S. treasuries. And the treasury is saying, whoa, if I got a lot of buyers, do I really need to raise my price? No, supply and demand, right? Let me finish the inflation story. Let me get back to that. I'm sorry about that. So I think the CPI number, I'm not in the prediction business, but my gut's telling me, based on everything I'm looking at, it should be a little bit lower than last month over month, but it's still going to be inflation, right? Even if it goes from 9, where it was, and 8 to 7, let's say, right? Or even less, it's still 7% inflation, right? And year over year, if we keep looking year over year, the inflation was creeping up. You're looking at a bigger ratio versus when it was down at 1% inflation. So you got to parse it accordingly to what data you're looking at. But let's say it comes down. Is the market has been going up, so they're anticipating lower inflation, buying up stocks. Stocks are moving up. Is this going to be sell the news type event where we already priced that in and the market starts selling off? Again, I'm not in the prediction business for right now. For September, we're seeing a positive start. We didn't really see that in the fundamentals. kind of see out an overbought, oversold situation. So we're going to have to kind of play this out. Now, TBT, let's get back to our 20-year inverse. This means we think the yields and bonds are going to go up. And look at this. Since June, it's gone up. If we look at, let's see if I can get back here to 2022. There it is, 2022 here. Look at, we saw, I'm going to make this a little bit bigger. We saw the yields rising, and look how we got into this early back on. It was down in the lows of 16, 17, and it ran all the way up to the top up here, up to 27. We get out of it, but it's been dropping, and now it's on the reverse track, and it's almost back to the highs of where it was. As you can tell, it's in this again. This is a busy chart. I apologize for that. I have a lot of stuff here. It's not something easy to read. I understand. We've got the blue line, the Twomey trend track line. That's moving up, staying within that. We did see it abate the last couple of weeks. This is the daily chart now, and it's been staying within this range. It hit it, it came back, and now it's on this way up. What I want to talk about on the relative strength is, though, this relative strength is almost 65. 4 days ago, it was 68, and it pulled back. We had a number here that was 64, and it pulled back. We had a number here, and it was 55, and it pulled back. We were over here, and the relative strength index was a whopping, 60, and it pulled back. So, what we're seeing, and then let's take on the inverse of that. Down here it was down, it dropped the low of 53, and then it raced up. Here it dropped the low of 44, and it raced up. Never got near the 30 oversold, or the 40, and between 40 and 30, which is oversold in my book, and I start taking a look at it. So this is kind of an indication that the pressure is on the price upward, right? And the relative strength index, we expected a pullback here, but we didn't expect a catastrophic pullback. And sure enough, we stayed in our trade. We've got a lot to look at here on this graph, but I'm going to save that for another day. The net of it is we're long and we're staying long, okay? And if we start, we got our stops, we adjust those stops accordingly. I didn't adjust them, I don't believe, on this week's market report, but I am going to adjust them if the market starts to rally a little bit, the TBT, not the market, the TBT. All right, so that's relative strength index. It's funny, I read somewhere, I belong to a lot of systems out there. Some of them I've recently gotten rid of, but there's one or two that's more data-driven information than stock trading. And all of a sudden they started talking about RSI. So it's in a volatile market, it seems to be working. So keep that in mind. Let's take a look at it. And it's a good way to see if your stock is overbought and oversold. And when you enter, and I had some new entries out today, but let's look at one that we were in and then got out, and then now we're back in. That's the solar panel ETF. This one, we felt it had raced up quite a bit. We got in late. We got a sell signal. We got out. We got a few percent profit as it came down. And now we got the buy signal again. We got back in. But the relative strength was up near 67 almost. And then, recently it was in 60. And today it's at 59. And, I got back in it. The alert came out. I think it was even in the market report. But with that said, I was ambivalent because it's near overbought, and the overbought is to always had pulled back. It's a green play. They tend to be very volatile. It's not quite a cult stock, so because it's an ETF with First Solar really impacted this because that took a huge run up the last week. But with that said, we're in it. We got out of Blank, which is the charging station, and we got a few other greeny plays that I gave an alert for, and we'll see where they go. We're in the market to make money, and if it goes against us, we get out real quick. Capital preservation is our second motto, right? All right, so let's see. Macro trend, I think I showed you that. You can see year to date down. We had to have summer rally, and then you know it bounced back out of it and got back into the the downward trend. But we'll see. It looks like September, so far running up, and more to come. More to come. It is getting a little bit exhausted out there in the data as far as the overbought side, but we'll see. The trend deeper dive in the market report. Again, a messy chart, so I apologize for that. One of these days I'm going to have to clean it up, but I do use it to trade, so it's going to be messy. It's just going to take time for you to understand the process there. Here I tell you all about the market report. I'll let you read into it. I'm not going to go into it here, but we use exponential moving averages, which put a little more weighted average on the recent data that's coming out to give you what the market is doing real time. We use the 200-day, the 9-day, and the 14. We look at the 50, and with that, we start using guardrails. We'll start selling a third, or buying a third using some of these techniques. Right now, we saw the bounce up last week. It's trying to get back into this blue summer rally trend, and we may take off if it starts getting up towards this blue line, this 200 EMA, and it doesn't act as a repellent. It's off to the races. It really is, because we're above our 9, we're above our 14, we're above our 50. If it doesn't break soon, this market's going to take off. So we're going to have to see where it goes. Sector analysis this week. Another interesting thought: IT. And when market's been going up, IT was number one during a whole summer market rally, right? This whole summer market, IT, growth stocks that don't have a lot of, the P&Es are high, price to earnings ratio. Their earnings, they don't have a lot of, well, they have earnings, but the earnings are, they're spending more money than they're bringing in. They're growth oriented because the people are betting on the fact that this stock is red hot and it's going to go up, and they're going to just expand and add more growth. The more growth, the stock goes higher. So with that said, all of a sudden, IT's at the bottom. I mean, it's right here. So all those NASDAQ way at the bottom. And, it was number 4. It was number 2 a couple of weeks ago, and then it's number 4. And, it's been at the bottom the last 2 weeks. Energy is now back up. And what I'm filtering on is this 1 month. Okay. I'm sorry. The 1 month, I pay a lot of attention year to date. Energy has been number 1 all year long. It was in the 50s when we had some of our nice run up on energies, but here the money is flowing back in to energy, and utilities is now starting to come up. And utilities, I've talked about this a lot. Utilities, a lot of people will put their money into utilities. It tends not to fluctuate a lot, but it has been this year. And they'll put that in there because they get good dividends. And they'll look at this as a way to park their money. When yields go up on bonds, they'll get out of utility. And also some utilities, you can get some tax deferred money from the, it's not there's some tax exempt for the state or what have you. So, or federal, it all depends. You have to look at individual. I tend to use the utility XUL as the ETF basket of play versus individual stocks because there's a lot of them. But in a cash account, you probably want to look at some local utility plays that can give you some exempt status on your tax return. With that said, I look at the 1 month. Utilities is racing up. They were lower a while. Materials is starting to make a move up. They had been negative for a while. Healthcare, it's usually a defensive sector. It's not there. So energy, utilities, they're making a run. Money's going back into now. If you look at, we got out of our UNG natural gas, U.S. natural gas, because that is a very volatile. You can get 10-point swings in a matter of days on that. We took our profit. We had substantial profits. Once we got back into it, we got some spectacular profits over the 4 to 6 weeks. We took our stops out on a 1/3 and 1/3 got stopped out, and then we got our sell signal. We may come back to that, but we still held on to the last 1/3 XLU, and I believe I sent out another, some updates on that. In some of the subscribers got their emails today telling us where to go and how to go. So the sector analysis is starting to take shape in September. The fall is an important part. We said it before. Hedge funds, fund managers, everybody in Wall Street, they tend to come back from summer vacation. They take it off autopilot where they don't want major swings while everybody's whereas low volume of trading. Trading picks up. More volume can cause more volatility. Why? Because they're trying to position their book to look good for the year end so they can go out to their customers and say, hey, we made you money or didn't make you money. Or they're trying to position themselves, depending on which side of your hedge fund or whatever, if you're whatever you're trying to sell to your customer. And then you also want to get future customers by saying, hey, we outperformed the S&P, blah, blah, blah. Well, if you got some spectacular profits like energy gave you, you're going to lock in some of those. You'll take half of them off, and so more they start selling off, and more selling, and of course, strategic reserves are released, and blah blah blah. All these things go into the play there in energy. You look at Europe. Europe is in a crunch since Russia shut them off. They did build their stockpiles. They bought a lot of natural gas from us. We ship more by mid-year than we did all of last year. We get rid of some of ours and give them to, sell it to them. Sure, we're selling it at, market price, but, it causes our prices to go up, right? Supply and demand, economics 101. We really need to get our handle on that when we're making our trade decision. But Europe's in a heap of hurt. Even if they got 2 months of stockpile, that's going to wane. Wind's not going to do it. Solar's not going to do it. They're keeping nuclear plants. They're firing up coal plants. They're trying to build storage terminals. That whole environmental strain on the macroeconomics, it's going to play itself out. And right now, who's going to cry uncle first, right? Russia or Europe. Europe's they could draw, they're having a hard time coming up with fuel for their production plants in Germany. I mean, that's not a secret. It's going to affect prices if Britain and France or Germany put caps on utilities, what they can charge. I mean, price fixed never have worked in the history of the world. Like I said, they're in a heap of pain. And will that contagion sweep across the country just like our, debacle with the financials, 2007 to 2009? Hard to tell. We're going to see. We're going to, like I say, fundamentally, things look really bad and the stock market's going up. So, we're going to have to really pay close attention. So that's this week's market report on the Twomey stock market report. There's more in the newsletter, a lot more detail. Some look at that and they're telling me, my eyes glass over. I understand. Others, love the detail, love the analytics, and want more information. The bottom line is we give you that information. We allow you to disseminate the information at your own pace. We give you the trades, the trade trackers. You got to sign up for the real-time alerts. That's it. The number 2, mestocks.com. All the other stuff, you just pull it down from the website, right on the homepage. I make it easy for you. But the real-time alerts is where we're making our money, right? That's where the trades come in. We jump in. We got in one the other day. We got in at 58, and by the end of the day, it raced up to the 62. So that's where we're making our money on that. When that trade real time, and it goes right to your email, on your phone, on your desktop, and bingo, you can go in, make the trade, go back to doing what you're doing, and take advantage of it. Because these buy signals in this volatility market and sell signals are coming rapid, really rapid. And I'm changing the stock stop prices as well because, volatility is the word out there. So it's definitely worth going in there. And what else? There are more detail in the newsletter that drives, some training in there. We talked about price to earnings ratio, the relative strength. This week we delve into some other numbers and data that fundamentalists use. It's cash flow, right? Basically, to understand on a company. The short of that, cash flow fundamentally, if you own a business and you're operating and you have more cash than the next company that's your competitor, you can take that cash and you could do a couple of things. You can invest in new plants and technology and even get another leg up on your competition, or you could go out and buy your competition and fix all their problems and even grow your market bigger. If you don't have cash flow, you're doing your market. Is your product going away? Is technology, eating into your company base? Do you have to change the people? Something has to change, because you compare that against your competitors in the same market, in the same sector, and if they've got good data and you don't, there's something going wrong there. Well, if you're an analyst, you're using the same. I also put in there, I think there's like 7 or 10 items that you want to look at. I nibbled it down to like the top 6, I believe. But if you're looking at it from an analyst, do I want to invest my customers' money into this? Cash flow is like P&E range, the kind of quick and dirty ratios that you can look at very fast and then say, this doesn't look perfect. I think I want to try the competitor. They look a little bit healthier. I'm going to invest in that. A lot of things go into it, but it's something that we want to learn. And it's not something you're going to learn overnight. I was in graduate school, accounting was not my favorite. The engineering side of it was, the business side of it, it was an engineering and also business master's. But with that said, financial analysis was something I liked because it was mathematical crunching and it seemed logical, right? With that said, I got the feel for how to look at a company. Now I look at what's on the website. Everything's done for you already, and I can, dissect that pretty quick. But it takes you have to watch it for a while. You have to get familiar with it. Yeah, eventually, if you look at similar stocks and similar sectors and similar their competitors, a theme starts to develop, and that starts resonating with your analysis. At first, it just looks all Greek and it won't make sense. That's okay. It takes a long time. And I'll be honest with you, it takes years. And then sometimes you have to also see a market cycle actually go boom the bust to get a feel for it even more. I know, we all have busy lives. 2, when we have downtime, we want to spend it with friends and family and fun activities. We're not going to sit there and learn about economics and, analysis of trades and stocks. Hey, who has the time? I'll do that for you. I'll give it to you. If it's not something you want to read and you just want to go to the stock table and pick the ones, bang, 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 and move, terrific. That's fine with me as well. But we're here to help you. We're also here to train you so you can become the experts. Because what did I do? I started trading my own money. I had some, fortunate luck. I was in an employee-owned company. We brought it nationwide in public, took my money and ran. Was able to start my own company. I did some other things. I went back to work in business for a while. All said and done, I started trading my own money. I got a system, seemed to work. I liked it, expanded upon it, started helping coworkers and friends when they asked. I don't really like doing that, especially family and stuff, because, it's a little too close to the touch. But I enjoyed it. I liked it. And then now I want to get, perfected it. And they kept coming back, and I still have some that come back 10, 15 years later. I got a guy that moved overseas that, keeps begging me to run his money for him. I don't want to do that, but I'm giving him, some help where I can, where he asks. And now I want to give back. So I'm giving it back. I want you to take a look at that website, get involved in it. Do yourself a favor, sign up for those alerts, because that's where it's all going to happen for you to make some money and some quick trades. We're in a very volatile market. Let's see where the fall brings us. We're going to get some great news or bad news this week with some trading activity. We're poised to take advantage of it. And I think you'll find that the newsletter is going to start to resonate over time as you start to dig into some of these technical principles and fundamentals. So that's the Twomey stock market report for this week. You'll find us on Twitter. You'll find us on Facebook and Instagram. At Twomey Stocks is the handle. Twomey Stocks, the number 2 ME Stocks. Of course, the website is the number 2 MEstocks.com. Hey, thanks for sharing some time with me. We'll talk to you soon.